afternoon to you, Chip.
Good afternoon, Todd.
Well, what did you see in the marketplace that you liked today, and what happened that you did not like?
I'd say two things. I think it's demand-related. Number one, even though corn was lower, we saw the bull spreads work. I like that. We're coming into the export sales report tomorrow. It tells me that we're starting to uncover some better demand. It doesn't mean we're going to rally immediately, but I like where we're at, trying to forge a harvest low, in my opinion, in corn. And then the second thing would be on the beans. Same thing there. I think we've got good demand going. The bull spreads work. We were higher on the day. I like the action really in both those markets, even though at first glance you see corn lower. You don't really like that, but the spreads are telling me we're trying to at least put some sort of a temporary bottom in this corn market here.
It's easier to see the demand for the soybeans because the export market continues to be really good. How about for the corn? Where's it coming from?
Well, I think basically every sector. We had the weekly ethanol grind report out today. Another big week on the ethanol grind. Ethanol margins are good. So I think that while export demand has bounced and is better than it has been in corn, I think the ethanol demand is really strong right now. And I think feed demand even has picked up. And on this break, I think some livestock feeders with obviously with high cattle and hog prices are taking the opportunity to lock some corn feed in here. And they've been waiting for this for 18 months or better, and they have it, and they're taking advantage of it, in my opinion.
Is it a case, as the old adage goes, high prices cure high prices? And I don't know whether we want to call this a low price yet or not, but at least demand is building because of lower prices.
Exactly. That's exactly right. And sometimes that takes a while. Unfortunately, for low prices to cure low prices usually takes longer than high prices to cure high prices. So that's the negative we've got here. But yes, on this break, we're starting to see the demand increase. It's a slower process. It's not just going to be an overnight V type of a bottom here. And it's, let's face it, a week from this Friday, we've got a pretty important report that could still have a really big impact on prices from a yield and an acreage standpoint. So the story is yet to be told completely on this year's crop.
And those two might be offsetting.
They could be. They could be. That's really going to be, what it boils down to is how the USDA handles the acreage issue and the prevent plant issue. So no doubt, I say no doubt, and there's always a doubt when you're talking about USDA reports, but likely that we're going to see a small uptick in yields. But in our opinion, the question really comes down to how much of an adjustment do we see on acreage due to that prevent plant on corn. So it could be a wildly volatile report on the 8th.
Much of a change in the marketplace between then and now, do you think?
I wouldn't think a lot. I think probably more the same, just chopping sideways. The fact that we're at 3+ year lows now in corn, funds have a big short position. I mean, it wouldn't be out of the realm to see a little bit of a short covering bounce into the report on corn, but I wouldn't think that we do anything other than just kind of the sideways choppy range we've been in for really the last 4 to 5 weeks here.
Are there any time points at which you would take advantage of the range-bound trade between now and the report? I guess, and I don't know whether you're going to call 440 the top of the range on December, or which is just another dime up, or someplace higher than that.
Yeah, I think from a corn standpoint, I'd want to see it a touch higher than that. I mean, if we got up towards 450 on short covering, I think that's probably an opportunity. These beans as well, I think the uncertainty on the beans is with producers kind of finishing up the most of bean harvest here in the area, yields better than expected. Could we be setting ourselves up maybe for a touch bearish bean yield report here on the 8th. So bounces, if we'd see them back up towards or slightly above $13 on November futures, probably an opportunity to maybe clean up a few of these straggling bean sales that are left, especially if your yields were better than anticipated and better than average.
Would you take something out of the bin to sell it at that time?
boy, if it's in the bin, as far as beans go, this December, January basis is really good, generally speaking. So I don't know that I'd sell it for cash, but certainly for December, January type movement, if we got back up over $13 on the futures, I think you could, entertain that.
You mentioned that livestock producers have been taking advantage of the lower prices for their inputs. Should they continue to do so?
Oh, I think it makes sense, absolutely. Could we grind lower eventually on this corn? Absolutely. But I think it's pretty prudent to at least get a portion of that locked in. Maybe the rest of the year and the first quarter of next year, if you haven't done so already. Just take advantage of the big break in prices that we've seen. Leave yourself open, as far as not locking 100% of those needs in, but I think it definitely makes sense and is just smart risk management to lock at least a portion of those feed needs in after the big break that we've seen. 3.5-year lows. We haven't seen, cash corn prices this low in over 3 years. So it definitely is an opportunity from a feeding perspective.
We don't talk to you often enough on the air, live at least. Any final word for us before I let you go?
Well, I would say, get ready for volatility based on this November 8th crop report. Got a large supply of bushels hanging over our heads here. So if we're a producer and we have better than expected yields, be ready for those, 20 to 40 cent bounces in corn to trip the trigger, and it's not too early to think about 14 sales either.
Hey, before I let you go, anything out of the WASDE numbers that are coming out the 8th, too, that might be funny?
Well, I think the biggest is the acreage. That's the real wild card on all this, and from a world perspective, it looks like we are into a period where we're increasing stocks worldwide without any major problems. We still have a situation where we're year over year increasing stocks. We haven't seen that for 5 years. Acreage is going to drive it, but it still could be a real wild card.
Hey, thanks so much.
Thanks, Todd.
That is Chip Nellinger. He's with Blue Reef Agri Marketing. Joined us here on a Wednesday afternoon from the Closing Market Report.
Agricultural programming is made possible by Farm Credit of Illinois, dedicated to improving the quality of life for Illinois farmers by offering financial products and services geared specifically to the farm community and developing partnership-based relationships with its agricultural customers.
Well, Dave Dickey is here now. He'll take us through the Ag News for the afternoon. Remember, you can always find us online at willag.org.
In agricultural news, CFTC commissioners are voting on the final version of the customer protection rule today, which includes softened language on the controversial residual interest provision. The CFTC proposed the customer protections rules a year after MF Global's collapse left thousands of futures users with millions of dollars tied up in bankruptcy proceedings. The residual interest provision could cause futures commission merchants, or FCMs, to require farmers, agribusinesses, and end users to pre-fund potential margin calls. One of the main changes in the staffed draft would phase in the residual interest and capital charge changes over 5 years. Meanwhile, yesterday, the CFTC voted to abandon a court challenge of a rule designed to limit speculation in commodity markets, agreeing to drop the agency's appeal as it works to advance a revised version of the rule. The CFTC voted to drop its appeal of a September 2012 decision, tossing out the agency's position limits rule, which aimed to curb sharp price spikes by limiting the percentage of the market any one firm can control in certain commodities. Taiwan is increasing inspections of beef imported from the U.S. after health officials there found a shipment containing traces of an unapproved growth additive. A 300-kilogram shipment was found to contain a feed additive known by the brand name Zilmax and barred by some Asian and European countries. The discovery marks the second such case in Asia in the past 3 weeks and comes after Merck & Company, the maker of Zilmax, suspended sales of the feed additive in the U.S. in August amid concerns it causes animal health problems. Earlier this month, South Korea suspended beef imports from a processing plant operated by Brazilian meat packer JBS SA after the country found Zilmax in beef products shipped from the facility. More than 200 agriculture groups have sent a letter to Farm Bill Conference negotiators stressing the need to protect the long-standing permanent farm law. The letter goes against a couple of key policy changes approved by the House of Representatives in its version of the Farm Bill. The agricultural groups stated that the 1938 and 1949 permanent farm laws play a critical role in forcing Congress to continually re-examine farm policies. The House version of the Farm Bill has language that would make the new finalized commodity programs into the new permanent law. And that's a look at today's agricultural news.
Hey, thanks, Dave. Dave Dickey is Director of Agricultural Programming for Illinois Public Media. It's public radio for the farming world. I'm University of Illinois Extension's Todd Gleason, the host of the Closing Market Report and Commodity Week. Now, up next, farmers in the area have been harvesting a very good corn crop, and given the weather, many are wondering how good it could have been if it had rained late in July and August. I'll have more on the growing season from the University of Illinois state agronomist Emerson Nafziger. The corn crop is coming in, and you can call it a bin buster if you want. That's pretty different than anyone expected. It just didn't rain in late July and August. Fortunately, there was plenty of moisture, too much, in the ground prior to the rainfall shutdown. As it dwindled away, the corn crop seemed always to be just a day or so away from losing connection with the water in the soil, says University of Illinois Extension agronomist Emerson Nafziger.
So I think what we had was a crop that, just sort of kept going and was probably on the verge of giving up at some point. Once we started to see the crop, not dying early, in other words, it was maturing about when the growing degree days said it should, then we knew that, that it was still getting water and enough to fill the kernels out completely, and that's what happened.
The good yields farmers are bringing in all started during the pollination period. The NIC went very well. Illinois was doing an irrigation study on corn at the time.
We thought this would be, with the dry weather we had after mid-July, we thought that irrigation would make quite a difference. And some people might remember that in mid-August, at the time of the agronomy day, I suggested we might have 300 bushel yields with irrigation in our corn crop. It really looked like a very good crop, and it turns out it was a good crop. The really surprising thing, though, is with a total of 1 inch of rain in August and September, and with irrigation we added over 9 inches of water during that period. So one set of plots there had 9.7 more inches of water than the other set, and it made a difference in yield of less than 20 bushel.
The shock then is that without additional water, without more nitrogen, without a fungicide, the difference between the irrigated and non-irrigated corn was less than 20 bushels. The check yielded 240 bushels to the acre under what most considered adverse weather conditions.
Well, that's a lot of water. 9 point some inches is a lot of water to get 19 bushel yield return. But if we were equipped to irrigate, it probably would have paid for itself. Nitrogen, adding nitrogen along with the water then bumped the yields up even further, and we were then at 277 bushels if we added both water and nitrogen. As I said, we put fungicide on half the plots as well, but it really didn't do anything no matter what else we had added.
277 isn't too shabby a yield, smiles Nafziger, but given the 240 bushel to the acre check plot yield, it underscores the statistical work supporting an optimal yield for economic return, profit per acre, versus the maximum yield potential.
We had some other data come in on nitrogen. One site in western Illinois, we had about 18 inches of rainfall between the first week of April and the first week of June. And so we took advantage of that, went back and put some supplemental nitrogen on some where we had put it on there in the first week of April. And we put it on